All right, so we're going to be looking at Bitcoin and what it did as a result of yesterday. Talking about yesterday in the price action of Bitcoin, I did not expect price to continue to go higher. It did want to take out the fair value gaps from in here prior to the drop. Now, I'm not expecting price to continue to go up higher. I'm not expecting price to go lower. I'm kind of in a neutral phase right now, mainly because we have lots of gaps up here prior. No, I'm sorry. We have lots of gaps up here that we could tap into before the drop, or we could just drop now and stay incredibly bearish and hit that a little bit later. But at this point, I'm going to wait for, I know it's a Memorial Day and all that, and so I'm going to wait for tomorrow in order to do something. So tomorrow's price action is going to be a whole lot more stable. Now we looked at Nasdaq as well, and just about missed 30,000. I think the highest was a couple of points away from that, 5 points away from that. So we have this big new week opening gap. I imagine we're going to fill that in on Monday and Tuesday prior to hitting 30,000, or it could just sweep 30,000 and then drop down lower. But I do expect it to fill in this gap. It's not too far away. It's only 500 points away, and it does that, overnight. And also, this was Friday. I'm sorry, Sunday evening price action. So that is a little weird how it pushed up 500 points, just shy. Oh, not 500 points. It pushed up 250 points almost prior to Monday open. It's kind of crazy, but open up immediately skyrocketed, and then we were just chilling at the highs. So from there, obviously, the market is overall very bullish. Has been for really like 2.5 weeks, 3 weeks maybe. So from there, on Bitcoin, it was reacting a little bit differently. But if we look on the 1 day time frame, you can see how obviously we have not been running higher for 3 weeks. But market on Bitcoin is looking to go down lower. I just didn't expect it to react this way from Nasdaq, because they are correlated. The range is pretty low. You can see from 0 to there's just about a 100-point range. So I wanted to see it sweep the liquidity from above, which it just about did, but just about missed. But from this, SMT down there was a little bit on the 1 minute time frame that I want to touch on. So you can see how the market aggressively pushed up higher. These two candles at 8:30 pushed up, created the fair value gap. Now I was looking at this in real time. I already saw the SMT build up, so I'm expecting the expansion at the open. Two big candles, then immediately made the fair value gap, filled it into the tick, and then after that, immediate zero drawdown, pushed straight up into the TP, which is in a conservative area near the highs. It's not very conservative. This is very conservative. This is medium conservative, and this is slightly aggressive. And anything above that is aggressive. And from here, really, the SMT began, and from here, fair value gap from this high to this low, the midpoint was respected from the bodies. You can see how it respected it. Respected the bodies just there. And from there, this candle hit 50% immediately in the opposite direction. So from here to here, you can see how we have a volume imbalance. Stock market, it did respect it. A little bit shy of a 50%, but it did dip into it. And then from there, the market just about immediately wicked, and it went in the opposite direction, just about, 0% drawdown on there as well. So from this trade, obviously, how I treat these volume imbalance. I go a couple of ticks above it, and I keep my stop loss very conservatively. A little bit conservative from this. I'm not too this here is an aggressive stop loss. Like, you want to see it fill in and then immediately reject, which is quite a bit unreasonable. I like to have mine a bit more spaced out, just to give myself some more wiggle room and whatnot. But from there, you can really go for the same take profit zone from here to probably the same, maybe a little shy, be more conservative this time, but that's a 1 to 8 and whatnot. But from there, it was just about ripping itself, just completely ripping the entire way up. From here, it wasn't really as structured as Nasdaq was. And I mean that in a way of fair value gaps, immediately fills it in, volume imbalance, perfect entry. It didn't really do all that, mainly because this one was the asset that made the lie. This is the one that told the truth. And from that, this is the one that I would very much rather trade, mainly because this went higher and this went lower. This is the one I want to pay attention to. But after that trade, it was the same thing here. So I had the high, low, low, high, the difference. So from there, I'm looking for an opportunity or a reason as to why I should get in. And this was my reasoning, right? So From that SMT, I'm looking for any kinds of fair value gaps, really anything that I could use as like a confluence to get in. Although this fair value gap was a couple of ticks, which I don't really consider as a real fair value gap, right? I would not consider that as a real fair value gap there. But what it did was it hit it once, hit it twice, hit it 3 times, and then it started to reject down lower. So you could see how the market was rejecting this price multiple times, 1, 2, 3 times. So from there, obviously, I'm going to be looking for a short opportunity. Took a short just about in there. And these are all market orders, right? So I go there and I just click sell, and it just kind of fills in by itself. But from there, whenever I had that short from there, I had my TP fill in completely of the fair value gap all the way down just about to the view up, because I know the psychological level of 30,000. People are going to be, there's going to be a lot of fear about getting it to 30,000. So everybody knows it's going to hit up there. So the market is bidding a lot of liquidity, plus there's like a lot of fear and uncertainty and whatnot in the market just currently. And on top of that, 30,000 psychological level and whatnot and all that. So I want to see the market, retrace down lower. Building a lot of liquidity for that $30,000 area. So that's going to be quite exciting for the liquidity run on that. So I'm going to be paying attention for the run here at 30,000. That's going to be, again, pretty exciting. But, people are going to be like shorting the highs. They don't want to see it to go 30,000 and whatnot. And, I'm completely prepared for it. I'm ready for it. I can't wait for it to hit up there. It's probably going to open above it if we think logically. It might just open above 30,000. It could also gap down quite a bit, so we'll just have to see what happens. But from this point in the lunch, I didn't want to trade the lunch, but I don't know. Whenever I saw this displacement, I was like, let's give it a shot and see what we can do. And once I saw displacement, it dropped down just as fast or even faster than it went up. Went up, consolidated a bit, dropped straight down, made the higher low, made the lower low. This one consistently, continued to go down lower. This one immediately reversed, started to go higher. Once that happened, I was in for a low risk. This is a half risk buy. So this is a 3% risk entry, and this is a 1.5% risk entry. So I'm not gonna put a dollar amount on it. I don't want to reveal that. But from this particular trade, it would have been 1.5% risk compared to the 3% of the normal. But from there, we went to 50%, just about 50% of the New York AM session, just about getting it into that premium zone. Went up into that and then immediately rejected and then started to consolidate for the close. So that was it for this day here. And gold was a whole lot more illiquid. So you can even see, I don't know why I can't adjust this price anymore. That's super weird. Oh, it was the A, wasn't it? No, I don't know what it was. But now I can adjust it. Weird. Anyway, so on the 1 minute time frame, you can see how illiquid it is compared to usual price action. You can see over here is a whole lot more liquidity. You could just tell the difference, right? So from here, bank holidays and whatnot. This one made a lower low, made a higher low, displacement up higher, made the SMT, then it started to push up higher. There was a fair value gap in here. So you could see the low to the high and the midpoint was respected. That would make me a lot, very interested. Respecting the midpoint, then let's keep that there. Why not? Let's keep that there. There you go. Now from there, respected the midpoint with the bodies, gap down, and then immediately went up higher towards the VWAP. A very, very quick 1 to 3.77 risk reward. So what I enjoy doing sometimes is I would put a buy right there and a stop loss just about there and a TP. Just so I can see the dollar, just to see the dollar value, 550 and 2,000. That would make me feel fantastic there. But that's pretty much that. Put on the 5 minute time frame and save it. So on the pound, today was not as clean as it would usually be. From the highs to the lows. I did not end up trading this setup mainly because of how slow it was. This is a 5 minute time frame. Remember, taking forever to get down there, and it was a bit unattractive. You can even see here, very unattractive looking market. I didn't even look at this asset to be completely honest with you. You can tell relative equal high, lower high. This is like a medium risk short opportunity, mainly because it didn't go up higher prior to the drop. So it could have hit the day open line, or as the previous day's higher low. Yeah. Previous day's higher low could have hit that and then dropped, but it was, very, very bearish, and then it dropped down lower. But from there, didn't make SMT down in here. You can see that immediately. So from there to there, you can see how I would take the long opportunity here and look for that hold up into the new day opening gap or even to the day open. But from here, you can see we're on a downtrend. So you go on the daily time frame, you can see how we're in a downtrend, right? So I would not look to hold a buy for very long, mainly because if the overall market is bearish, you don't want to hold the buy for too long. But from here, let me see where we're at. There we go. So you see how we had a fair value gap just in here, a little bit volume imbalance, didn't want to fill it in, but fair value gap just there. Look at that respect to the midpoint. I mean, it's just like rinse and repeat. ICT concepts is rinse and repeat. From right there, just about got 50%, and then filled it in the first time. Second time filled in 50%, and then that was it there. And then immediately pushed up, and then would have taken care of it there. But this is at least a 1 to 4, 1 to 4.5, maybe I'd say. So if we enter there after the respect, put the short stop loss there. Oops. And I'd put it probably near midpoint or something. 1 to 5, 1 to 4.5. Look at that. I mean, it just looks beautiful, doesn't it? Just looks gorgeous. But yeah, I mean that's basically it. So you can see how the market was holding itself up, and how much more bearish this one is. So I would definitely look for a short if it continued to trade. So if it never closed, if it continued to trade, I would have held it. And if it wasn't a bank holiday, so you can see how this one just held its weight up here, and this one was a whole lot more bearish. You can short this one, but expect the price to take out liquidity and then drop. In this particular instance, it didn't, I guess. And this one pushed up and then eventually started to go down lower. So, yeah, for Bitcoin, we went over Forex, we went over silver, gold, and Nasdaq ES. We went through all that stuff. For crude oil, I'm not looking at crude oil too much, but I called the drop a long time ago. Called the drop like way back in here, and then it pushed up, filled in the new day opening gap again, and then it started to sell off again. But see, you can see just looking at the chart, new week opening gap in here, filled it in, and then from there, price immediately started to sell off for like 2 weeks. So from there, I'm looking for the market to at least take down liquidity down here, at least down here. I want to see it go down here, and I want to see the gas prices start to drop back down. Can you go away? I don't care. There you go. So from there, I want to see this one get filled in, really. And then seeing the market, drop back down lower to be more stable is what I'm looking forward to. So you can even see on the Brent last day, see all the liquidity up there just ran it up completely. 79% retracement level. You can see it there. See how it hit 79 just right there, and then that's when it dropped. So I mean, ICT concepts work at really at all times, and it never doesn't work for what I've seen. So even from here, you can see how the market, new day opening gap, didn't want to fill it back in, but from here, it made higher highs. This one made relatively equal highs. You can short it in here. The market dropped back down lower. Notice how this one made a higher high, just about a tick or two. So this one made a higher high. This one made a lower high, and then it just sold off. And from here, you can use the OTE from there, or you can use the OTE from this high to this low, although you see how close it got to your stop loss, I'd be a little bit careful there. But from here, you can see how this one would be the one that you trade. This one would be one that you fade. So from here to there, stop loss, see the market started to reverse down. This would be my short entry. Drop back down, pushed up, get another retracement, and then it started to reverse down lower. So from 79, I like to do it for just from 705 once it starts to trade over, once it starts to fall down. So the price is bullish, still stayed bullish, then it starts to reverse down. That's whenever I'm interested. So I would take a short just about right there. That's my rule across all assets. It doesn't just stop here on crude oil. That's when the market starts to push up, it enters your level of interest, then it starts to drop back down lower. That's whenever I look for that trade. So just about there, sell, put it near the highs, and then TP would be really wherever. I like to see it go down pretty far to take TP. But yeah, that's Nasdaq, gold, a bit of Forex, Bitcoin, and that's crude oil right there.